Welcome to Academic Gain Tutorials. In this video, we will look into the differences between tax planning and tax management. Tax refers to a mandatory contribution of a person towards the country's revenue, which is imposed by the government on the income or wealth of the persons or included in the cost of goods, services or transactions. Every assessee wants the tax liability to be minimum, and for this, he or she can take recourse to tax planning, through which tax burden can be reduced to a minimum by using legitimate ways and means. Tax planning is often misconstrued with tax management, which simply means the process of systematically dealing with taxes. The basic difference between tax planning and tax management is that tax planning stresses on reducing the tax liability. Tax management is all about minimizing the taxes. So, let's look into the basic differences between tax planning and tax management in a tabular form. Difference number 1. Tax planning can be defined as the systematic planning of assessees' financial and business affairs by adhering to the taxation provisions, in a way that complete benefit can be availed of all the applicable deductions, exemptions, allowances and rebate. On the contrary, tax management implies the practice to avoid defaults and penalties and adhere to the legal provisions of the Income Tax Act. Number 2. Tax planning is all about planning of taxable income and planning of investments of the assessee, whereas tax management deals with the proper maintenance of financial records, audit of accounts, timely filing of the return, payment of taxes and appearing before the appellate authority, whenever required. Number 3. Tax planning aims at reducing the tax burden of the assessee to a minimum by utilizing all the permissible tax deductions, exemptions, and allowances. Conversely, the main purpose of tax management is to comply with the provisions of the relevant tax statute and allied rules. Number 4. In tax planning, emphasis is laid on reducing the tax liability by legitimate means, that is, by using those ways and means that do not deceive the intent of the law. On the flip side, in tax management, the focus is made on reducing the taxes by the timely filing of the return, payment of advance taxes, payment of taxes and appearing before the stipulated authority, so as to prevent penalties, interest and so forth. And, difference number 5, while tax planning is not a compulsory activity, tax management is compulsory for all the assessee. Tax planning is an honest and legal method of availing the full advantages of taxation laws. It is a way of effectively managing the income and taxes so that the tax liability arising on the assessee is minimum. As against, tax management is an art of handling the financial affairs, while complying with the tax provisions, so as to avoid the payment of interest and penalties. So, these are the differences between tax planning and tax management. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.